Oh hey, welcome to another edition of Socrates Explains Everything. In this case, the stock market and how to trade options. Today we're going to look a little bit about how options move in relation to a stock and just talk about options and the charts, and I'll try to show probably too much because there's just so much to show, but it's all here in front of us. This is a daily picture of Apple, and it spans back to about November of 19, so it's a couple years. And you can see this is the big COVID crash we just had. And when you look at the option chart, the interesting thing, this is one that expires this Friday, and this is at 350, so it's essentially the current price of the stock. The big spike in value is not at all connected to this, and these are basically on the same date. Like I said, this begins here on 15 of November, and this is again around 20th of November. The crash, the low point of the crash is here on 23 March, and if you look on 23 March here, it just sort of flattens. Nothing else happens. It doesn't actually go anywhere. Even though the stock itself climbs quite a bit, you would think that the option would go with it. The problem is this is the expected move. Options move outside the normal range. Like I say, if the line between you and that tree is what you're supposed to walk, if you get there faster, the option makes money. A call does. If it go there slower, a put makes money because a call is a up bet and a put is a down bet. Now, if you look at if I zoom out on the Apple chart, you can see how the smoothness of the line is more or less here, but then it gets ahead of itself. And this is the phase that made that option money, had you been holding it for a really long time. And this phase in here, when again it suddenly burst, is when the option got ahead of itself and it went up in value. Now, personally, I don't trade options a long time like that, primarily because I'm not that good at it, and it's hard to do it when with this dynamic there. But if you look at the daily chart, you can see essentially the same pattern that we see with the main two indicators I use, which is the MACD and a momentum. And as the price came down, the MACD fell through the horizontal line, which is a key that is important to kind of keep your eye on, because above the horizontal line tends to be an uptrend, and below the horizontal line tends to be a downtrend. And you can see the point where it split the trend here was here, and sure enough it went downtrending, and when it split it again was right here, and sure enough we uptrended. Sure, there was a little uptrend below it, but at the same token, you want to be sometimes sure, the reversal's a reversal. And also in the momentum there was a strong reversal. There is this thing called divergence we've mentioned. Basically the height of these peaks or valleys is important. This is a much smaller valley than this valley here, and in this case you're looking also at the price, and so the price at this point here was 173. Well, the price at this point was 144, so it was a more downward price, a weaker price, a worse price, and yet the momentum was much better. So even though the crowd was screaming bloody murder and booing and hissing, there were a lot fewer people doing it, and that's pretty much a really strong reversal sign. So if you were looking to buy this stock as a long-term buy, that's a nice thing to see, and you can see it tends to be a strong pattern that follows it for a while, and it stays even on that trend line if we were to build our trend lines, which I like to draw so often. Excuse me. Also, on the other big huge dip, you can see that the momentum dipped and dipped and dipped. It didn't do a full-blown reversal, a double a double bottom reversal type thing, but there was essentially two price bottoms, and this price bottom had, you know, a more positive momentum. So there are some indications that do it. Now let's see here. On the option, you know, this sort of gave an indication here on this reversal through momentum, but there wasn't that many options to trade it. This works better on the current option. So if we switch over to a today's option, and I'll switch this to 250 ticks, and you can see today was a crappy sideways day is what this is. You can see that this had motion yesterday, and since again that was more than they expected, this one would have put the puts would have gone up in value and calls would have lost value on that one for sure. But today it was a much more jaggedy day, and you could again see that the MACD was essentially sideways. It broke free in some different places, but it also gave some indication of what was going to happen. You know, the momentum reversed at different decent times. I mean, if I'm now I can't point with the pointer because the pointer is what's holding this, but the top of the box is the time at that reversal happened to be 1539.43, and it has the price of the price of it doesn't really matter. At this point, I'll just take the time because I look at this onto the option chart because I don't trade the stock, I trade the option. So at 1539.43, we cover here. We look at our option chart. Now that particular one was not really all that tradable, and when that signal happened, you wouldn't necessarily react to it because things weren't lining up. Because you can see this too has a MACD. Here, let me get rid of this. This too has a MACD and a momentum, and I'm finding, because I'm still playing with these things on an endless basis, that this reversal of momentum, because this is the option, this isn't the stock, you know, it does a pretty decent job of detecting when the momentum is actually reversing in the price, because that's what it's based on. You know, so, you know, the trick, of course, is to be good at getting in and good at getting out. Because I mean, this would seem to be a really good setup. You got this little strong reversal thing, so if you bid on it, the problem is seconds later, the price might have dropped out from under you, and you know, you have to either take a trailing stop out or bite the bullet. But you also look at the chart. So, because I mean, it did pull up quite a bit higher from that. It's one of the things again about options. This thing at that point, if you bought it there, you're looking at $390 per option contract, which is $390 a contract. But you know, not even trying to grab the tippy top of it, it went up to $445. So, you know, from $390 to $445 in just minutes. To me, it's a doable thing. This is a really, 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 really bad day. This was a horrible sideways day, and this is not an easy day to trade. I got a little lucky today. I'm not gonna complain. I made a teeny bit, and I'm not gonna complain whatsoever. I walked away without a loss, and it have worked better than that. But you know, take what you can get when you can get it. Part of it is just it's repetition and just watching the flow of it. Because, like I say, let's take a look at that chart on the time 1631.20. 1631.20. I don't know if that was this one. Yeah, 1631.20. So that was in here, and this hadn't quite reversed yet. In fact, I was looking at almost trading this, but this was such a strange action that I decided not to, because at that point I had been more successful than, and I was happy not to. I traded a couple of these swings in here. The earlier in the day, the more trustworthy you're going to see it, because you see these patterns form. This is a nice triple wave. things like to happen in threes. You know, it was so much better before the computers took over because human beings all ran these markets, and we all sort of had the hive mentality that it'll be a three-wave, and it's not the same as them now because the machines, they can make money going against us. So, but sometimes it holds true, you know, and still, and it had a nice three-wave pattern. So I traded some of these going up, and then I bought, you know, calls to go up, and then I bought puts going down, and you know, like that. It's at 15.45. Yeah, see, this was one of the ones that sort of worked, you know. And then when you put in a trailing stop, which is what I'm not doing, as soon as it gets positive, basically it's going to ride until it pulls back. And you end up making a little bit sometimes, and sometimes you don't lose money, and that's the most important thing. Because again, from $4.06 to $4.60, you know, 60 cents on $4 is more than 10%. It's like almost 15 odd percent or whatnot. And in 3 minutes, you know, the problem is, you know, you can even see that you could have held this thing for a while, and it would have crossed your back in and out of positivity multiple times a day, you know. Now, to show you essentially the way the whole thing works. Now, what I've done is I've attached, there are important moments here. When the MACD crosses over, that's an important moment. When the momentum crosses from positive to negative, it's an important moment. When it crosses from an upward slope to a downward slope, it's another important moment. And since it's too hard to watch all that stuff at the same time, because there's a lot of things going on, I turn them into sounds. And sounds cut through your brain pretty effectively. So when this MACD goes from positive to negative, it goes meh, because it's a negative sound. I can't reproduce it, but you'll hear it. And I think you have. And this is a bubbling sound. To me, it's a bubbling tomato sauce. And I also made them slower for the slower charts. So like on the 250, it sounds like bubbling. On the 500, it's more like blub, blub, blub. And on the 1000, it's blub, 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 blub. And I've just been adding some more sounds here, so they're probably going to change some of them. But at the moment, there's a chicken. When this is only on the call, mind you, because I'm mostly trading the call, so I was trying to keep extra attention on the calls action. So when the call, when the call goes here, there's a chicken sound. When it goes downwards, there's a crow sound. I believe this is a winding clock, and this is a dinging clock. One of these is a buzzer. So the idea is that negative sounds connotate negative actions, and positive sounds are for positive actions. So this is again how I trade. This is the same Apple stock. That was the put turning positive here. You know, let's see, knocking out the uptrend. I don't know. You need to have something else that sounds different. But if you've seen these before, all of these are Apple, and this is the Apple 25, 50, 100, 250, 500, and 1000 tick chart. Each tick is that many trades of 100 shares or more. Over here we've got the call, and over here we've got the put. I have news attached to the S&P, so anytime there's news basically attached to anything, it comes up here. That positive sound was something I didn't talk about. This is a volume thing that I made, and that's turning positive. And they boo when it goes negative. If you do stand-up comedy, you can appreciate a little applause. There's a louder one for this mountain graph. That is a separate thing. That's just the trend lines. I said I like making trend lines. So this morning I boxed the downtrend into a long trend, top bottom. And you can see right here when it broke out of the trend, you know, it came up and then back and retested it, bounced, broke through it, bounced off it, broke again, and now it's essentially following that trend line. Trend lines are really wild. The number will follow it a little bit like an oil layer where it just sticks to it, and even when it breaks through, it comes back. And that's why when they break this trend, you have sort of a belief that it might go somewhere. And if you look at that, what that was at basically 16.59. Because again, I trade the option. So when it broke from the trend line, was right about there. So the $1.61 and one up is $1.93. That was that MACD for a slow one changing. So 30 cents was about a 20% move. That was probably one of these two turning down. So what I'll do is I'll watch. I also have the S&P over here, and this is the advanced decline line behind it. That was a negative momentum going from white to blue. You know, it's a lot of little sounds. The idea is that they shouldn't overwhelm you, so you can concentrate on something else, like making a video. And, you know, if I couldn't see the screen, I would know that the momentum's dying, that any uptrend is basically not going to go much farther than that. You know, so you have to sort of, you want things to align. You know, you'd like to see what looks like a bounce in the stock look like a bounce in the option. And then you have more confidence that that's going somewhere. You want to see your options has MACDs as well. I'd like to see, this is a downwards MACD with the price. This is a little more believable. Maybe we're going to have a bottom in here, and because the call looks like it's going to go up. The put is the opposite side, and it also looks down, so it's possible that we're finding a bottom. The MACD on the 250 is moving up, and even though it wasn't diverging because the price wasn't down, it's still somewhat diverging because the price was about the same, but the MACD was much more positive. So it's possible that we have an upwards swing coming up here. But it's 7:30 our time, and by now the action kind of dies out. You know, the market sort of weakens. So for me, I wouldn't trade this anymore. I might make a video, but beyond that, I don't really look to trade it at this time. But for the most part, I look at what the market's doing, and then what is the actual option doing. And in case you're wondering, these options are the 19th of June. You know, it's the 350 and the 355. So it's a 355 call. Again, 25,000 shares. You know, there's more open options, but this is the most volume, 25,000 shares or contracts today. You know, the 350 on the put side is also 25,000. It's a lot, especially because the puts tend to have less. But this expires tomorrow, and so I'm now doing at the money. And if I trade it tomorrow, I'll still trade this week's series, but I'll probably be trading something that's just slightly in the money. Again, the volume of series contract traded and the price, because if it's only 20 cents, I'm not going to trade it because you have to buy too many of them. So I'd still buy, you know, the one that's slightly more expensive, because that way, because I try to trade about $1,000 to $2,000 at this point. If I'm right, I'll make money because I can make 10 to 30%. You know, my best trade today, I got 15%. And if I'm wrong, it limits how much I can lose because, you know, at most I'm looking at $1,000, $2,000, which is a lot more than you'd like to lose, but it's a lot less than losing $5,000, for example. And if you try to trade Apple with any less than that, how are you going to do it? I don't know. So anyway, I think that's more than enough. This is I like that song. That was that was the call trying to go up. But at the same time, the volume broke down to negative. And it's such a nice, you know, negative sound. It's just like if you're thinking about, is it going up, and you hear, it's like, it just subconsciously makes you double check what's going on here. Double it. You know, just because it's going down doesn't mean it's not going to go up, you know, and vice versa. Because essentially you're looking at reversals one way or the other. It sort of ends up, you can do the follow-on trade, but it's got to keep going for it to mean something. And I mean, again, that was the other momentum going down below it. But you look at today, there was no follow-on. It was just up and down, up and down, up and down. So if you're going to try to follow that, how are you going to get a follow-on trade when there's no follow-on? You know, I'm a momentum direction trader. That's what I try to trade. So I trade reversals of momentum, and if possible, momentum. But anyway, that's it. See you.